Hello, and welcome back to your South King County real estate update. My name is Sarah Eggleston with Stone Egg Realty at John L. Scott, and I'm back to deliver your local real estate news for the month. Go ahead and jump right on into these slides. So it is April 2024. I have a class coming up next week on the 18th, Thursday. It's a pre-home buying workshop. And it's all online. So you can do it from the comfort of your own home in your pajamas. Totally fine. I'm doing this class the third Thursday of every month. So the next one will be April 18th. And make sure to check the description after this video for the registration link. And I do have my spring buyer and seller guides available. So if you are thinking about buying or selling a home this year, I highly recommend you reach out and get one of these little packets. They're full of information that can be helpful in succeeding in all of your goals for real estate in 2024. And into the news. Spring housing market brings more picks for buyers, yet little relief. So we have had an increase in inventory, and actually 17% in King County from February to March. We have 17% more new resale listings, new single family listings from February. And that's good to see. We have been short inventory for a long time. We're still not back up to our normal levels, but seeing that 17% increase from February to March is a very good sign. New condo listings jumped 22% in King County. That is many more condos than have hit the market recently. We haven't seen that many condos hit the market since the summer of 2022. Overall, as I said before, we are still a little bit slim on our inventory, even if we have had a bit of an increase. We're at the lowest level for March in 7 years. We're trying to catch up from many, many months of way too few listings coming to the market. And stubbornly high interest rates are keeping many homeowners in their homes if they currently have one, or putting first-time home buyers on the sidelines for a little bit. It has been a challenge to transact in real estate this year. I'm not going to lie. Mortgage rates averaged nearly 7% in late March, and we'll get to what's happening with mortgage rates now in a little bit. But the market is still super tight, and there's still buyers out there in the market for sure. At the current levels of demand, it would take 1 month to sell all of the single family homes for sale in King County, the shortest period in nearly 2 years. So this is a seller's market. Homes are moving as fast as they're coming to the market. So home prices are holding steady. Just from February to March, it was a very small uptick. King County was 13% higher on their home prices from a year ago. That's big. 13% higher is not a sustainable thing. We will see those price increases decrease as we move forward. But $945,500 was the median sale price in King County in March. For South King County, home prices climbed 7% since last March, and in North King County is 11%, East Side up 19% from a year ago. So these home price increases are just very, very strong. Condo prices were a little more volatile. They did tick down a little bit from February to March, but they went up 11% from January to February. Here's that home price activity for single family homes, King County. A year ago, we were at $840, and now we're at $945,500 for our median sale price. All other counties did tick up as well, although Kitsap much closer to where it was a year ago, because it had this big run up last year and then ticked down. And for home sales, closed sales did go down in Seattle, North King County, Southwest and Southeast King County. East side, they did go up, but prices are up in all regions. For condos, a little bit different story. We did have an increase in Seattle and the east side and barely in Southeast King County, but huge decrease in North King County and Southwest King County for the number of closed sales in condos. Prices down in North King County and ever so slightly in Southeast King County, but up in all the other regions. The number of pending single family home sales has picked up across the region in March, eclipsing last year in most areas. High mortgage rates and high home prices have continued to shut down some potential buyers and keep some sellers that may have been considering a move in their current home because they want to hold on to the interest rate that they currently have. And this stat was pretty, I thought it was pretty stunning. Across the US between 2000 and 2022, a home buyer upgrading to a 25% more expensive house would need to boost their monthly payments by about 40%. Now that same upgrade would cost more than double the buyer's monthly payment, according to a national mortgage data tracker. So this is not great news if you are looking to buy a home, but we'll touch on that a little bit more at the end of this session. To lower monthly costs, some buyers are putting more money down, which is hard for a lot of people. But the median down payment in the Seattle area in February was about $165,000, up 31% from a year earlier. Nearly a quarter of all home purchases were all cash. So this is a pretty shocking stat here. So that brings us to our market stat minute. For Southwest King County, overall, we have about a 0.9 month supply of inventory. So if no new homes came to the market, we would run out in 0.9 months. And 76.3% of homes going pending in the first 30 days. That is an extreme frenzy. It's a frenzy in all price points too. Some more frenzied than others, but things are moving. It is definitely the spring market right now, and we would have more sales if we had a little bit more inventory on the market. For Southeast King County, 0.5 month supply, so half a month we would run out of inventory if no new homes came to the market and we continued to sell at the same pace. 92% of homes going pending in the first 30 days. That is crazy. Extreme frenzy in pretty much all categories until you get over a 1.5 million. So Southeast King County is plugging along really strong. New resale listings for Southeast King County, the brownish line is this year. So we are tracking ahead of where we were last year on inventory coming to the market, new resale listings, but still far behind what our normal was heading back to 2018, 19, and even 2020. This is when we had the big dip when COVID hit. And everyone was trying to figure out what was going on, figure out how long it was going to last. And since then, it has been following the general trend line. But now, last year, 2023 and 2024, we are seeing way fewer listings come to the market. So we're pacing ahead of where we were last year, but still too few listings on the market to satisfy demand. Here's those buyer contracts. Look at this jump from February to March in the number of buyer contracts coming to the market. We're tucking right back in closer to our trend lines here. This is a much steeper line than the last slide. These are those two stats overlaid. So the green is newly listed homes and the orange and / gray is pended. And we are gobbling up inventory just as fast as it's coming to the market. So when our bars touch or surpass our lines here, we have a decrease in overall inventory. Things are moving fast, and that's exactly what we're seeing right now. For our hyperlocal breakdown, Kent, Renton, Auburn, and Federal Way, these are the new listings coming to the market. Up 20% from a year ago in Kent, up 11% in Renton from a year ago, but down in Auburn and Federal Way from a year ago. So we're kind of comparing it to right here. But we are up so much since December, January, and this is a good trend to see. Hopefully this continues further into our spring and summer markets. For pending sales, those did tick up in all categories too, although down in Federal Way and Auburn from last year and up in Kent and Renton from where we were a year ago in March. Median days on market, we had that December, January tick up. Things were kind of sitting around, but now we are back to between 5 and 7 days average on market in all 4 of these categories. This is definitely a sign that we are in the spring market currently. Median sales price has been kind of bouncing around depending on where you're looking. Up again in Kent and Renton, up in Federal Way and down in Auburn from 1 year ago. But we did tick down in Federal Way and Auburn from last month and up in Kent and Renton from last month. For mortgage rates, last time we met, it was at 6.85 for our 30-year fixed. Our weekly average was 6.88. And if we look at this month, our weekly average rose to 6.88 from 6.82 last week. So the weekly average remained pretty steady from last week, but rates have been drifting higher in recent weeks as stronger than expected reports on employment and inflation have stoked doubt among bond investors over how soon the Federal Reserve will move to lower its benchmark interest rate. The central bank has signaled that it expects to cut its short-term rate 3 times this year once it sees more evidence of cooling inflation. So we did have some pretty strong job numbers come out, which is not a great thing for interest rates. The inflation has gone up as well. So if we bring it to today's interest rate, what happened because of those reports? 7.3 is where we are at on our 30-year fix today. That is higher than we've been in many months since November. It was a really bad week for mortgage rates. As you can see, we have not gone back to where we were last fall. That was still far worse than where we are now. And overall, experts expect interest rates to tick down throughout the year, although it's yet to be determined when that is going to start. This is from the National Association of Realtors for the inflation numbers. March inflation figures were very bad, which also means bad news for interest rates. Consumer prices re-accelerated to 3.5%. This is higher than the 2% target inflation, which raises eyebrows regarding the Federal Reserve's delay in cutting interest rates. The bond market immediately responded with high yields to compensate for the loss in purchasing power. Mortgage rates, unfortunately, will move a notch higher and are likely to cross above the 7% mark in the coming weeks, which we have already seen. In addition, the gigantic federal budget deficit will soak up more borrowing, thereby leaving less for mortgage borrowing. So it was a bad week in interest rates. Hopefully we see that turn around soon. This is a quote from Forbes. Current expectations are that the Fed will start to cut rates at some point between June and September. The exact timing depends on how incoming economic data looks. The Fed's March meeting did not set up the prospect of a near-term interest rate cut, but a summer cut appears likely. So here's what's been happening with interest rates since the beginning of the year. When interest rates pop over above this 7% mark, we see really weakened buyer demand. The increased demand numbers were from March last month during these little dipped time periods and January. But once it hits over 7%, there's just fewer buyers on the market. And housing demand has been on a steady rise due to population and job growth, though the actual timing of purchases will be determined by prevailing mortgage rates and wider inventory choices. So that's from Lawrence Yoon, the chief economist at the National Association of Realtors. Here are the projections, which have been adjusted quite a bit from where we saw a couple months ago. They're now not expecting rates to go as low as they were originally forecasting. Somewhere in between 6 and 7% is where everybody thinks that we're going to average out for the mortgage rates for the year, and ending Q4 at about 6.2% on average if you average these predictions out. So if you zoom out, affordability is still very, very low from a historical perspective. This is Housing Affordability Index going back to 1990. During 2009 to 15, this was the distressed properties. So there was a lot of homes in foreclosure and reduced prices that made them, this time period, more affordable on the Housing Affordability Index. And we have enjoyed a continuation of housing affordability up until 2022, and look at 2023. It is harder to afford a home now than it was just a few years ago. But what determines affordability? It's wages, mortgage rates, and home prices. So there's more than one aspect that is affecting these home price affordability index numbers. And if we look at those, wages are actually climbing at a faster pace. You can see this boost of wages trying to catch up based on the increased inflation. Their wages are increasing. Home price forecasts, Goldman Sachs is up at 5%, but NAR's down at 1.4. The average of all of these predictions for where we'll end 2024 is about 3.2% appreciation, which is significantly less than we've seen in the past few years. So home prices are growing at a slower rate than they have recently. Wages are growing at a greater pace than they have been recently. So once those interest rates go down, that home price affordability index will adjust. Things will become a little bit more affordable, but we are headed in the right direction on a lot of these metrics. So just a reminder though about those spring buyer and seller guides. I do have those available. Reach out if you would like a copy. And I hope to see you next week on Thursday, April 18th at 6 p.m. for a pre-home buying workshop. If you're interested in this, there will be a link in the comments or the description, wherever you're watching this, there will be a link somewhere. So I hope to see you there. If you have trouble finding the link, feel free to reach out directly and I can send that information over to you. If you have any questions, please feel free to reach out. My phone number and email address are on the screen there. I would love to have a conversation with you about the real estate market in your area or possibly an area you're interested in moving to. Yeah, let's grab a cup of coffee or sit down at my office, whatever's easiest for you, and we'll have a conversation. Thank you again for joining me for your South King County real estate update. I will be back here next month with your local real estate news and some relevant national news in there as well. I hope you have a fantastic month. Maybe I'll see you next Thursday at that pre-home buyer class. Otherwise, see you next month at your South King County real estate update. Thanks so much for joining me and have a fabulous day.